The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. Monday, August the 18th. Moving along. Oh, August is flying by. My pleasure to be here Monday through Friday market days at 877-927-6648, 11 o'clock till noon. That's the call-in number. And what a fascinating market. Friday, we got that reversal. Of course, remember I was grumbling about having that fantastic option play, which actually cost us 30% on a 5 cents loss on a very inexpensive position, which went up 700%. Well, that's the way it goes sometimes, you know. I like to have very tight stops. I like to have things just neatly organized, and if it doesn't pan out, there's always another time. But most importantly, I felt as I did my work over the weekend that there was a chance that if there wasn't that bad news on Friday, that was the response to the Ukraine-Russian situation, that in fact what we might even see is some give back of the gains. Now, of course, I have myriad techniques that I've developed, proprietary techniques that I've developed over the years, and one of them is the Chapman wave trend gauge. That trend gauge, once in a while, gives a false reading. Mostly it's got a 95. It's just got an unbelievable success rate in predicting within 1 to 2 days different techniques, different ways of reading it. One of the techniques says that within a day there should be a very sharp move in the futures. That was the one that was presented on Friday. But it was also presented under the auspices of the Friday options expiration, the triple or quadruple, sometimes quintuple options expiration. And this is something that infrequently, I'd say 2 out of dozens of times, twice, there's been a reading that gave a false reading. In other words, it hit a number, a very low number, and should have given a very sharp response by pulling back the following session and then rallying. And in fact, I didn't do that. My reading for Friday was that there should be a gap up, and that the gap up should, in fact, on Monday, should be up overnight, and it should translate into the cash indices. Now, that was a little unusual, but that was the reading that I had, and we've got that, and so far we haven't had the pullback, although my 10-minute chart, let me just get the 10-minute chart, my 10-minute reading of the, this is the naked chart right here, says, I drew this in as we were going on, the final break after Steve Rhodes' great show. Terrific shows, folks. 8 o'clock, John Logan comes on, 8 o'clock Eastern Time, and they just program right through the day with all the different techniques that we've spent not just months or years, but decades sometimes on producing these particular techniques. So, you know, we really are about education here. But, you know, in the Chapman wave, the most important aspect is to go from the lowest, most obvious low bar and merely count each successively higher peak. When you get to the fourth highest peak, that says that's where you've got to be careful. It isn't where it necessarily has to be the sharpest pullback, but that's often where it happens. But it can go to an E, an F, and even a G. And in this case, right from the low bar at 12 o'clock on the 15th, that's on Friday. Yep, at Friday. The E-minis went down to 1937.25. And then what did they do? They went peak A, B, C, D, but D was like an instant restart, immediately went to a higher high, which is always very positive. And what it did is it went to a peak E at 6:10 on the 17th. That's early this morning. Was it last night? Yeah, today's 18th. Last night at 6:10. and then it reversed down very gently, a little stair-step move from the high of 1961.25. I'm looking at the September E-mini contract. Look, lo and behold, it goes down to 1956.75, and then it goes peak A, B, C, D, and repeats exactly a spike up to a leg E, and that becomes a top. Goes to that doji candle, double doji candle at 3:30 this morning at 1963.50, pulls back very modestly, just a nice stair step down, a cool consolidation, and 1959.50 starts a new move. And what does it do? It goes peak ABC, and it gaps up, and it doesn't gap up, it spirals higher, and it goes to D. And what does it do? It bumps right into that red line, trend line that I had drawn in. This is the naked chart. I could use candlesticks. I could use bar charts. It doesn't matter as long as I've got a high and a low. That's all I need for this particular technique: a higher high and a lower low, and that's all. And I'm here to count the peaks and the troughs. Now look what's happened. It's very interesting. Why? Because that red repellent line has so far pulled that peak D, pulled the E-minis down a little bit, more sideways consolidation. But look what it coincides with, and this is going to be very important. It coincides with leg C in a rising wedge formation in the 120-minute chart of the E-minis. It's a very powerful leg B, just snuck a little bit over that red dashed line, but it's gone nicely over the candle high of Friday, and it's gone nicely over the inside track, Chapman wave inside track, resistant repellent zone. And that's going to be very important. Why? Because we've got another one, a different one, but a rising one this time in the 120-minute chart, and we stopped right at that trend line, right there at 1968.50. I'd say 1969 is really the top, but it went to 1968.50 in the E-mini. Now, I would not be surprised if we have some kind of a consolidation, either now or in the next bar, but there will be one. And then we go to a D in the 120-minute chart. For those of you who have started to trade, because we've been discussing it so much, because one of our dinners, Bob from Saratoga, has had such incredible success, but using the Chapman wave methodology with other techniques, with using the 300-minute, that's the 5-hour, in this case, the mini NASDAQ chart. Look, we've gone to same thing, resistance line, broke above the cup formation in the Chapman wave, which usually goes to a D, but if it breaks out after D, it can go high. It could even recycle. But so far, the technique says that there's been a tremendous move to the upside from the low that was established at 36.26 on the 8th. And now look what's happened. You've gone to 36.26. You've gone to 4,015. Wow, that's 380, but that is huge. And there's been a breakout. And now what I'm looking at is tremendous support at 39.90. So we're going to watch. And this could have recycled. This could be brand new leg A. I don't want to push things too far right now. Let's just go one step at a time. Let me run the numbers. The Dow is up 155 at 16,818. The NASDAQ is up 39 at 4,500, the 4,504. The S&P is up 15.5 at 1970. Now, very interesting, the VIX is down 75 cents at 1240. What I say to subscribers is what I do every day for my subscribers on my opening call is I show the charts and I discuss the patterns. And the pattern I'm discussing here is that if there was a push, it didn't even have to close, but if there was a push above the high of Friday, in this case 16,775, that would be very important. That would suggest you could have even another spike at the open the following session. That would be Tuesday. And then you start to pull back for a consolidation. But if there is a close above 16,775.27 today, it not only says, hey, don't dismiss the match with the break above on the 20th of May, from 16,341, that moved to the upside, even though the bars are way bigger than they were then. On the 1, 2, 3, 4, this is the sixth day. This is the 6th day after the low, 7th day. the seventh day after the low. Looking at tiny candles, but you were running above the 9-period exponential moving average. If you're listening to me on radio, that's one thing. But if you're looking at Tiger TV, this chart I show every single day. This is in my opening call. I show it and I discuss it in great detail. Not only do I do that, but I do this. Let me see if I can get it quickly, because while I'm discussing it, it makes sense to do that, just to show you what I do for my subscribers. Okay, there it is. Here it is. So this is what I show every day. And now let me slide this across right there. So I've got that exact chart right there. And I've discussed what's going on. And then I add at the bottom that now we have a potential rectangle near-term border between 16,775 and 16,577 with the VIX forecasting strength or weakness. So the VIX has dropped, and that's showing buying pressure. Let me move that away. So it's showing buying pressure. And in this particular instance, what you've got is that the Dow, and I spoke about this both Wednesday, Thursday, and Friday, well, on Wednesday, Thursday, and Friday, that ugly candle of the 31st of July, the 300 and something point decline, if we can break above, well, I'd say 16,746. And then I said 16,805, but 16,746 was the level I was looking at. If we could break above that, it says we're entering the area of trying to fill this candle, which is usually a very difficult thing to do. And if that's the case, it's showing some internal strength. And because there was internal strength, I raised the stop on our short Dow position so that we're now out of it for a little bit of a gain. At least we took a gain. I had a much bigger gain. It's okay. Took a gain. And we've been adding longs, and the longs seem to have been working, and it tells me that this mixed market is going to continue perhaps all of this week, at least for another few days. More importantly, if this really is B in a new buy signal to buy mode, I haven't yet got that indication. I have to wait for the end of the day, and I have to really study very closely the 120-minute chart. It's going to tell me an incredible amount of information. Why? Oops, how did that come about? That's not what I wanted to be looking at. This is what I wanted to be looking at right here. 120-minute chart did get to that leg D, which I showed my subscribers this morning. Did I put the Dow Diamonds in? I hope so. Anyway, I had it already, and it showed that there was a very sharp peak C drop on Friday, and then if there's a gap up today, I think I said if we got half, well, I can't remember, but my thinking was if we got over the 167.15 level, which is the 200-period exponential moving average, that says we could tackle the high, maybe make a new high over 167.46 for a peak D in a leg D in the 120-minute chart. That's what we're getting. Now, there's another indication that I have. I'm not going to discuss it right now, but that says to me, if you're following this one index, it is very positive that it's gone to an all-time high. And that establishes the fact that the rotational market could see the Qs leading. That's the NASDAQ. And let's just go back here. There's the NASDAQ QQQ series, Power Trust NDX 100. Oops, I did that wrong. NQU 14. There, I'll get that back again. And now I go to this, and we got QQQ. Look how powerful. Look at that. This is a new recovery high, leg C in the 120-minute chart. There was that. Yep, it's leg C. Maybe there was an alternative count, but I'm calling it C for now. But most importantly, the weekly has gone to a new recovery high, and the monthly has gone to a new recovery high. Now, an all-time high that was up at 120. I'll be back. We'll continue covering the markets. Basil Chapman, Tiger Technicians Hour. Dow's up 153. S&P is up 15. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back, and that's up 153, and we're going to go straight to Michael in Tampa, Florida. Hi, Michael. How are you? Michael, you there? He just dropped. So Michael wants to look at, let me check it out, Bank of America. So Michael, I'm not sure if you're able to hear. Please call back if you're able to. I know that some people have had some problem with their line lately, but Bank of America, BAC. I'm pleased you wanted to do this because I want to look at a number of the bank stocks. So Bank of America is rising nicely up 1.35% at 15.43. That's up 21 cents. It needs to break above 15.44 for a leg B in the daily, and that is the high so far today is 15.43. So it's got 2 cents to go, and it should do that as we speak. Hi, Michael. How are you?
Very good, sir. I'm interested in Bank America.
Okay. Now, do you have a position in Bank of America, BAC?
Yes, I do, and I'm thinking about increasing it because it seems to have some resistance there at 15.30.
Okay, yeah, you mean, yeah, it has support at 1530, right? And it's just broken the resistance. Actually, it has support very short term between 1536, 1528, but most importantly, it's been making rising lows, not yet rising highs. As we speak, I bet it goes above 1544 to 1545, and that'll be leg B in the daily. Here's my recommendation, and I'm going to do this. No, you've traded Bank of America before?
A little bit, but what I'm thinking of is every morning for the past couple of weeks it does this in the morning, and then in the afternoon it should settle back down to the 1520s range.
Okay, I'm so pleased you brought that up. Last week I meant to talk about it in one of the stocks that we were looking at. I know I'd mentioned it as a characteristic of biotech stocks, but I never really mentioned it as a characteristic of stocks that I look at very closely for decades. And when I've been looking at stocks, I like to see the characteristic of what they do intraday. There are some stocks that act fantastically pre-market, and then almost always they sell off by the close. They don't sell off to the lows, but they come off the highs. And there are other stocks that act just terribly, and then out of the blue towards the 315, 320 area, you suddenly see them garner strength because it looks to me, from my eye, that fund managers have been buying, and that's when they're waiting to buy. Great, you brought that point up. Now, this is what I'm going to recommend to you. I'm going to recommend that you have a position in Bank of America, and right as we're speaking at 1544, I'm going to suggest you think about adding another position, but it is a smaller position. I'm not going to tell you to go just fully involved into Bank of America, and let me explain why. Well, there are two things that are going on. One is fundamental, and one is purely technical. The technical is that the monthly chart could improve a lot. If this was even, it's at 1544, it just needs another 60 to 75 cents to get that monthly to really improve. And if it can break into a new recovery high above 1623, that's 80 cents, that'll be absolutely fabulous for Bank of America. Unfortunately, the weekly chart and the monthly chart both say that if there is a failure and Bank of America suddenly starts to trade down under 15, that'll just say, it might not be ready to break down, but it's not yet ready to break up to the upside. So that's because I'm looking, you mentioned that it's a longer-term position play, and I'm just going to suggest to you, I would add a position, as we're speaking, 1544, and that position I would have about a 30-cent stop, 30, 40-cent stop, a fairly tight stop, although it's that would be 10. Yeah, I think I'd be comfortable saying a 35 to 40 cent stop on the smaller position, but trying to keep that core position because it could hang around you just a little longer. But so far, it is participating with the market. Dow's up 0.98%, stronger than the S&P, which is up 0.82%. The Qs are up, let me just double check, 0.82%. So Bank of America is acting way better. So I like that, and I had a question. I'm going to add this to the answer that I'm giving you now about Goldman Sachs. It's the same thing, leg B. It's actually peak B if it doesn't make a new high today, a new recovery high, that is, above 170. 74.60. So far, it's acting quite well, also up 1.10%. And if you're looking at the XLF is in leg B, and it's got a pattern that says it wants to at least attempt the weekly rectangle resistance at 2293. Are you able to hold on a little bit?
Yeah, Basil, there's just too many things going positive in the market. It's
Correct.
About time overdue the XLF kicked in, so I think this week's going to be the week.
Hold on. We'll talk a little bit more about the XLF, and it's been a lagging, and it should catch up. I'll be right back with Michael, if you can. Hold on.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Folks, we're back. We're looking at Bank of America, and while we're on air, I said that this is just a huge chance by the time we finish our conversation with Michael that we will have gone to leg B, and exactly as that has happened. This is leg B in the Chapman wave on Bank of America. Now, that doesn't mean to say there's a guarantee that you've got a buy signal to buy mode. This is still a buy signal. These are the criteria. You look for the lowest, most obvious low bar, and that's taken place right there. I'm putting a plus sign just for now, and what we'll be looking at, and that's trough A, B, C, trough D to the downside. Let me just do this quickly. Now you've got leg A, and because we went 1 penny above 15.44, we have started in leg at 15.45, leg B. That's really important in my work, but the stochastic gives you the buy signal together with the price, and that's that doji candle right there from the low bar of the first into the fourth, the long weekend, into the fourth, where you had a low of 14.98, way above the, or not way, but above the 14.84 low of the first. And then what happens, a little doji, a silent doji candle, and then the next day you get a long-legged doji, but then you break out. Now you've gone peak A, pull back, and today we started leg B. Taking a lot of time to do that. While that's happening, the MACD, the moving average convergence divergence, has broken higher, but it's also broken higher with a very nice beta. The distance between the 9-period differential and the slow-moving average is big, and that's good. And for the first time, we got a really nice candle in the histogram. That's the 0% line. Now, as far as volume is concerned, you had a volume spike to the bottom, but it isn't the kind of spike that says to me you should go 28 to maybe even 52 bars higher. This is just one that says, hey, that was a climactic low volume-wise, but we haven't had the V-shape recovery, so that kind of, for me, just puts it aside as something that's interesting, and that's all. But the stochastic went from under 30% to where? So under 20% to now 53% with price movement. That's good. The histogram, as I said, is positive, and the on-balance volume is good but not great. It's really followed the price rather than leading, and to me that says I can't use it. It is a non-issue at this particular point. It's not giving me anything other than to say, hey, price has to be the arbiter of the trend. And until the price tackles it and goes above 1567, the high of the bar of the 30th of July, until that happens, I recommend that Michael add only at right as we were speaking at 1544, 1545, I add a small position, and I would rather be adding to Bank of America on strength than to be trying to buy the pullbacks. So the pullbacks hint that it's going to be the H formation that, in my CD introducing the Chapman wave methodology, we use a bunch of techniques. I showed you that 10-minute chart that was just the 10-minute chart. I've got it right here. Is that the 10-minute chart? Yeah, the 10-minute chart, which says there's a bit of a consolidation coming in at that resistance level, and it was just based on nothing but the price movement, higher highs and higher lows. That's all it is in the Chapman wave, one of the great techniques that I've just really enjoyed for, a couple of decades more. And so in this particular instance, this is leg B, but there's no sign yet that Bank of America has the kind of strength that Michael was looking for as an intermediate term buy that says, I'm buying it. It's almost like a Rip Van Winkle buy and hold, go to sleep and wake up in a year and say, oh, wonderful, Bank of America is at 35 or more than double my money. At this particular point, there is a chance, because it's peak G/C in the monthly chart, and that says you could still go to D. I just do one step at a time. I'd say, hey, this should be a good few days of the beginning of the week. We've got those signals that suggested that. And most importantly, what we're looking at is Bank of America has been steadily moving up, even though the Dow itself has gyrated a lot since the 8th of August. It hasn't broken out per se. And if it goes into that 1570s area, that's going to be very positive. But the XLF, oh, I did it again. The XLF is right now showing a stronger move up. Now, what I would say to Michael is that I would also, if you can, I'd also rather have a position, much more cautious position, but a position in the XLF, even if it's just a small position, or maybe even just buy a call on the XLF. Why? Because if the XLF is able, and this is a very, very important position, situation in terms of timing and in terms of the monthly charts and the weekly charts this week. Last week was very important. This is the follow-through week, either up or down. So what I'm looking at is if the XLF is able to get to that 2290, preferably let's call it 23 level, then certainly it's going to tackle the 2307 recent recovery high. But most importantly, it'll treat that 200-period moving average in the monthly chart, which I'm showing now. It'll treat that as an extension. If it can go above 2307, it'll treat it as an extension of leg G/C. Doing it in August, And then the 200-period moving average, which is the magnet line, both up and down, says that the further it can push away into the 24s in the month of August, early September, the much stronger it's going to be when it comes back to retest that 9-period moving average, which is just about to cross positive above the 200-period moving average in the monthly chart, because the stochastic and the MACD are still very strong. Even though there's been a little deterioration, they're still in very, very strong territory. So what would happen is it all fails, and that's the reason I'd rather buy on strength. It all fails if it takes out Friday's low of 22.45, because it closes under that. Why? Because it says, well, there's a good chance I'm going to test the 22.08 low of the 5th of August. And if you look at KRE, which we looked at recently, which is the regionals, acting the same thing in leg C, bumping up against resistance at 38.56. It's trading at 38.48 right now. Weekly chart is not anywhere close, XLF, anywhere close to matching the regionals. The regionals are not even close to matching the money center banks. Money center banks are way stronger. So I do like them. And if anything's going to move in them, and money fund managers are going to rotate, they're going to rotate into the laggers that are now showing strength. And it might be the Bank of America's, Goldman Sachs, and I'm also looking at Visa was the question. Yeah, Goldman Sachs is acting well, not great. But the weekly chart says it should go to a leg D above 177.48 if there is strength this week. And then that big gap is really the issue, the gap at 175.27 to 175.36 back at the end of July, beginning of August. That's going to be very important. Is it resistance, or can we get through it? A couple of questions I had. Okay, so we've got that. And now what's really important is that the Goldman Sachs is looking good, but not great. Visa, also I believe part of the XLF, is acting very nicely, but it got slammed to the downside. It's going to really struggle. I don't think this is such a great chart, but if it's able to 213.58, if it's able to get to 215, there's a good chance it'll try to test. 216.70 was the gap high from that July, where it went to 223.93 and closed at 222.74. Next day gaps down huge, 4.5 points, not more, and that gap is trying to be filled. So if he's looking okay, Goldman Sachs is better. Bank of America, I would say, is probably one of the more interesting stocks here. I think your risk, I wouldn't put more than a 50-cent to 60-cent risk on a smallish position. I would not be heavily into Bank of America. As I say, I'd rather be buying on strength. The next level is if it even gets to the so in Michael's case, he's got a position. I told you to add another position, small position, and I would add maybe another position if it gets to 1568 and then pulls back to 1535, 1540, 1535, this area now. And starts to hold. If it pulls back sharply, then of course I want out of it. So that's what I'm looking at. Okay. Now I haven't looked at I haven't looked at gold. GCZ14. Gold is acting very poorly, down 6 at 1300. This is that H pattern, the arch formation that pulls back, and the weekly chart. Nothing's changed. Look at this. Let me show you the pattern that I drew a year ago. Look, the H pattern goes to an M pattern, and the M pattern becomes a continuous arch formation. So until the GLD, trading at 124.97, down 51, is able to close, now I'm being very, very insistent, it needs to close above 133, the 200-period moving average. Then it has to push sharply above 133.69, the high of the 14th of March, the week of the 13th of March. This is a weekly chart. Then it has to push sharply above the high of 137.55, the high of exactly a year ago, August of 2013. And if it's able to do that, that actually turns into not a very bullish scenario, but a bullish scenario in the sense that it would try to tackle the high of 137.55. Yeah, whoa, that's what I said. No, sorry. If it does that, then it'll tackle that area there on the left side of 143.43. That's good. So I would just go step by step. I can just tell you this: that if the GLD starts to close under 120.150 for 2 weeks in a row, be careful. It could pull all the way back to 114.50. And then the dollar, this is so fascinating. Look, the dollar right now has not yet gone to a new, it's 1, 2, 3, 4, 5, 6, 7. This is the 8th day since it made that peak G-top. Remember, I discussed this in terms of the Chapman wave methodology. You know, my CD introducing the Chapman wave methodology, I talk a lot about this fast-moving average of the MACD, and that sometimes if you get a really strong move to the upside and you get that thing I call the instant restart at peak D, very often you'll go to a G, you will not go to the D, or at least you'll get your sharpest pullback at a G, not expecting that you're going to go that you're going to struggle to get to that new D. And that's exactly what we do. For those of you who understand the Chapman wave methodology, this is not Greek, this is not theta or theta. This is, in fact, just the Chapman wave methodology as it's being explained in real time. So now I'm doing something that's very different. I'm drawing a long rectangle oval formation that says that the dollar might have usurped, not the Chapman wave notation peaks, but usurp time rather than, and not energy, just time, because the stochastic and MACD have pulled back. They're still not bad. They're not great right now, but they're not bad. But you've used up time and you've held the 9-period exponential moving average. That allows you for one quick spike to a leg D, and then we've got to be somewhat careful what happens. And that's where gold might find some kind of a base. You're going to have to watch it real closely. What am I forgetting? EUR, USD, dollar, euro dollar currency pair doesn't look too great right now under the 9 EMA in the weekly. It was only first 2 hours or so of the week, so let's leave that alone. And we're looking at the USD JPY. That is the dollar Japanese yen currency, and that's acting okay. It looks like it's in a trading range, but it looks like it wants to go above 102.70. That was the high of Friday, and if it does that, it could still make a leg D above the high of the 30th of July at 103.077. For those of you who trade the currencies who are listening, it needs to hold the low of Friday, which is 102.131. And now we get to bonds. That's what I've been wanting to talk about. Look at this. Bonds, alternate wave count, but the MACD is very strong. The stochastics at 82%. In the daily, this is the Lehman 20-year iShare Treasury Bond Fund, trading at 116.99, down 72 cents. That was a very interesting inverted Roman candle on Friday. But holding like this is good. If the TLT breaks under 116.69, the low of Friday, there's a good chance it's going to test 116.08. The 116.08 to 115.69 area is key support. A break under that would say, we've made a rogue wave extension or right arm extension in the daily chart, this Chapman wave technique, and that says we could pull back, and we could pull back in time, maybe not yet in price, but at least in time, and take at least 3 to 5 sessions of consolidation. And that would allow the market to go a little higher. That's why this is a very important period. And look at the USU 14, the September contract. Pull back 30 seconds to 140 and 30 seconds, the high of Friday. 141 and 30 seconds is important. But you've got that same thing in the weekly that says this could be an alternate wave count, not a new leg A, but an old leg F. And if we turn this into a peak F, it says bonds are making some kind of a short-term top and could in fact pull back, and yields could go higher into the beginning of September. So I'm watching this real closely. Why? Because a high-level consolidation with the stochastic at 86% in the weekly, MACD forming an M formation, says that if there was a new recovery high after this, that has to be considered leg C in the daily, and very positive because it should go to D, and that extends the weekly chart. So the only thing I haven't done here is the Qs. Outstanding action. The Qs have broken down the weekly chart. The monthly chart is extended in leg F/B. This is really a very nice move to the upside. But the stochastic, interestingly enough, is only at 82%. MACD is way below where it was. The price is fantastic, but the MACD and stochastic are way below where they were at the high of the 24th of July. I'll be right back, and we'll be discussing in this last segment a couple of things that I'm looking at and why the volatility index, bonds, the dollar, and the Qs are going to be so important come this Friday's close.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks, we're back. Basil Chapman, target conditions are Dow's up 161, S&P's up almost 16. Now, this is very interesting. The Qs are at 98.13. They broke that falling axe formation. Remember Chapman Wave falling axe formation? That's declining cone formation. It has the same principle as the flag, but I have a particular technique that goes with it. That's why I call it the Oops, let me just put this in. Why I call it the Chapman wave falling axe formation. Now, what's really important about this is that, as I had made a note to my subscribers, I actually started sending charts out on Saturday morning and Sunday. As I finished them, important charts. I would have done much more, but I didn't have all that much time to actually do that because I was doing many of other things in just doing the research for today's, for what we want to look at on the long side, etc. But most importantly, what I was looking at is without the Qs making a top, and I mean a top in the daily that was the kind of top you had at 97.51 that pulled it back down to 93.64, only 4 points, 5% or so. But it was important that you got the right signals there, and we got the right signals. Now, this move up is using the right signals on the upside with the stochastic at 82%. I prefer to see 85, but it's 82%. It's only leg B, but it's a leg F/B at this particular point. Everything seems to point to it to being a leg B. And that says it should go to a C and D. Now, look, in the technique that I use, just without any moving averages, nothing. I happened to draw these trend lines because it was so easy to do. I didn't even need the trend lines. I just needed the notation. This has taken the most amount of time since that peak C to go 1, 2, 3, 4, 5, 6 tenths an hour that it's been without a new recovery high. So that's how your techniques can help you. Using this particular technique in the Chapman wave, identifying the peaks is really important. But every once in a while, you get an alternate count. But with the 9-period exponential moving average supported 96.49 and 1.5 points higher in price at 98.13, with the MACD expanding that beta and the stochastic still acting very well, I have to believe that we've got another, the rest of the week could see, at least through Thursday, we could see higher prices. Now, look at the candle, the question of the Qs and the 10-minute chart. I'll do that real quickly if I can. So this is A, B, peak C, D, and E, and you've taken your most amount of time right here. Look at that long candle, just consolidating. Yep, that's the same sort of thing. Now, let me do this. This is what I'm looking at. If the Qs continue to show strength, that's raising support in the short term for the general market. If you're looking at the VIX index, look at this. The volatility index, I just typed in the wrong place. The volatility index is saying that inverted spike on Friday was just news related. And in fact, it is very positive that with the Dow making a new recovery high, the VIX did not break under 1189. I'm beginning to see internal strength show up for the very first time in the VIX. And that's saying to me that I believe I'm probably on the right track, saying that there's a rotational upside correction going on in many stocks, and there's a downside rotational correction going on in many of the stocks that have been beaten down and having a good bounce. And therefore, it's still selectivity. You can look at individual stocks that are doing well and go long. You can look at stocks that are just failing to participate and are doing very poorly. And you cannot rule out that if you've got United Steel breaking out, up another 70, no, we had this at 12 or 14 or something, as well as 18 and 20, but we don't have it now. At 38.17, this is a sign of economic strength that's there, latent strength, and AKS. So all I can say, this is a rotational market. Don't be trapped by locking in your mind that we have to go down, we have to go up. Different things are doing different, have different aspects. Treat it that way. Be very selective. Stay tuned. Listen to Larry. Listen to the others. And I'll be back tomorrow. Have a wonderful day. Basil Chapman signing off. Thanks for being here.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.